Also, everyone, we're tracking retail sales. They came in higher than expected this week with a wave of economic data that we've been tracking, spelling out the consumer. And while concerns boil over inflation's path lower, this sending expectations of a no-landing scenario for the U.S. economy higher. Here to break this down for us, we've got Yahoo Finance's very own Josh Schafer here on the desk with us. Hey, Josh.
Yeah, Brad. So this no-landing scenario, that scenario usually comes when inflation doesn't come back down to the long-term average target and the economy keeps growing, right? And so that has been a growing case that people are making on Wall Street. This morning, we saw a group make that out of the Bank of America Global Fund Manager Survey. You can see here 36% of respondents saying they think a no-landing scenario is the likely outcome for the global economy over the next 12 months. That's the highest we've seen since they started asking this question in June 23. And I think one of the things I wanted to point out here is you look at the purple and the blue lines, that's really the debate here. It's soft landing or no landing. The hard landing camp has basically been diminished down to less than 10%, the lowest we've seen thus far. Hard landing, of course, would mean that we get a recession at the end of this tightening cycle. And I think, guys, this sort of speaks to the data that we've seen this week, last week. Overall, right now, there's little signs that consumer spending is slowing down. You look at that retail sales number for the last 2 months coming in higher than expected, getting revised up. You take a look at things like our chart of the day in the Yahoo Finance Morning Brief newsletter this morning. Incomes are picking up, right, across all three spectrums per other B of A data. So you're just wondering, where's the consumer weakness going to come from? And if that consumer weakness doesn't come, maybe you just keep getting economic growth, and at some point that growth keeps inflation from falling all the way down. Shauna hates the term no landing, so let's go for it.
So I have an issue with it, because if that trend does continue, wouldn't you then argue that the Fed is going to say, hey, we actually have to do something? Maybe that next move isn't going to be a cut. Maybe we eventually have to hike. And then if they do that, then you can ultimately make the argument that, hey, that's going to actually increase the chance of a hard landing, right? So it's almost like this no landing scenario. And I get why it's catch on and get why so many people are talking about it now, especially given the market dynamics, but it's also still split. I mean, ultimately, we have to have a hard landing or a soft landing.
At some point,
cycle,
yes. Right? Yeah. I think when we're talking specifically about the survey, the key determining factor there was in the next 12 months.
Exactly, yeah.
So, and I think that sort of gets to how people are feeling about the Fed path right now, right? Which is, what if you don't cut this year? Then you get to a point early next year, which we are right now, where you're either cutting or hiking, right? Where are we in a year? Maybe unchanged. And I think that was sort of my takeaway from that perspective.
Yeah, exactly. And you're right to point that out. And it was just about a year ago, wasn't it? When Torsten Slok first started to float this idea out of Apollo, talking about this no landing scenario, talking about the fact that we could almost be in the situation that we are in today. And his forecast a year ago, I think it was just around 12 months ago, has proven to be right, given some of the trends that we have seen, especially over the last 3 months. You can clearly make the argument, and yes, the data shows that we have made progress. The Fed has made progress in taming inflation, but still a far cry from where the levels that they want it to be.
And the other takeaway from this, too, that I've found interesting is you're not just hearing economists talk about it, you're hearing equity strategists talk about it, right? We just put up a chart from Mike Wilson over at Morgan Stanley, and he's sort of noted that what comes with the no landing scenario is potentially higher earnings. It also brings higher rates, right? We've seen that big move up in the 10-year over the last month. He argues that's the market pricing in a no landing scenario. So you're going to have higher rates, maybe higher earnings. Then the question is, where do you go? Someone like Wilson points to energy, where he thinks that earnings could still rebound and the valuation hasn't quite caught up. Not something like tech, where valuation is still high. But I think that's sort of an interesting debate too, is, okay, what if this is the economic period we're in for the rest of 24? We get economic growth above trend and inflation continues to sort of disappoint investors. What does that mean for the market? And is there a scenario where stocks can still survive that? Will be an interesting trend to watch, I think, over the next couple months.
Yeah, I mean, it was beginning of March that we heard from Torsten Slok that he said Fed's not going to cut rates this time this year. I would also vote for a better travel analogy for our next economic cycle as well here. So
because the plane always has to land, to Shauna's point.
My goodness, yes.
So it's not really an outcome. Yeah. It's a fair point.
Like use a boat or something like that. I don't know. Anything else?
It's going to be sinking to the bottom. All right, Josh, thanks so much.